I would say you would be a skeptic on this stock. That would be probably the most charitable thing we could say. This stock feels, if I'm reading your research right, like a dead man walking, number one. Let me turn the question a little, though, and ask you, is there anything this company could do to turn you around on it and say my price target of 16 a share is too low?
Thanks for having me. We're all anxiously awaiting GameStop's fourth quarter results, but we're paying less attention to actual fourth quarter numbers that GameStop reports, and that's because they already pre-released their holiday figures. What we are keeping a close eye out on is what outlook is this company going to provide, if any? And then also what we'd like to hear on the earnings call is how they plan to justify this $13 billion valuation.
Can they? How would they persuade you that a $13 billion justification is relevant, number one? And what does this company, I go back to the first question, what does it have to do just to survive?
GameStop has suffered nearly a decade of self-inflicting wounds from poor acquisitions, half-hearted turnarounds. So this time they need to go on the call and they need to explain why this time it is different. How do they plan to evolve to the digital age, to e-commerce, to mobile? And then bigger picture, they need to explain what is their game plan to evolve into a technology brand.
I get the challenges that GameStop is facing. I think we all know them. But respectfully, your price target of $16, don't you feel a little tone deaf? I mean, just given that the power of the Reddit trader bidding up this stock to now a company to see where it's trading at right now, what would it take for you to sort of change your view and perhaps lean into the powerful role these Reddit traders are playing, and they don't seem to be letting up really with GameStop?
$16 is quite a free fall from where shares are trading right now, but that price target underscores our confidence that this steroid of interest in GameStop will splinter off. From a behavioral economics perspective, the closest parallel I can draw when I look at GameStop, past, present, and future, is the Occupy Wall Street movement. Now, the steroid of interest in GameStop and this Occupy Wall Street movement both were founded to make a statement on social and economic inequality. Now, the Occupy Wall Street movement splintered off into other movements. At one point, GameStop was trading near $400 a share. Then it splintered off into silver. Then Elon Musk tweeted about Dogecoin. It splintered off into Dogecoin. Financial innovation is so prolific nowadays, we are confident it will wane off. From what I've heard, NFTs right now are all the buzz.
Very, very quick final question. You've got a question about the company's cash. Explain it very quickly, what you're worried about.
Our forensic accounting team did a deep dive into GameStop's balance sheet, and GameStop has referred to their cash position as a catalyst for their turnaround. What our forensic accounting team found is that boosting cash in the third quarter was driven by one-off items. Also, when GameStop references liquidity and improvements in their working capital, they lump in restricted cash, but restricted cash shouldn't be used for general corporate purposes.
All righty. Thank you, Camilla. Thank you so much for your analysis today. We appreciate it. Camilla Yanuszewski of CFRA.
Shepard Smith here. Thanks for watching CNBC on YouTube.